Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 3rd of September. I'm Daniel Lam, your host for the podcast. We've gotten some feedback for our podcast earlier this week about how Trump has been challenging the Fed and investors' potential concerns about the Fed's independence. Now, this would impact the longer end of the curve. So it makes sense to look at the US 30-year government bond yield. Now, it was in a narrow range of 4.8% to 4.9% throughout August, retracing from around 5% in May and July, though near-term inflation momentum is picking up. Recent comments from Powell reinforce expectations for rate cuts, supporting curve steepening as front-end yields decline. Now, political noise surrounding Fed independence, fueled uncertainties, and also US government bond supply, fiscal deficit, and long-term inflation are other key drivers of rising long-term bond yields. Now, over the near term, we believe the US Treasury will issue more shorter-dated bonds to alleviate pressure on long-dated yields. We're expecting US 30-year government bond yield to range-bound between 4.8% to 5.1% and would add to long-duration bonds if the yield spikes towards 5.1%. Now, we're seeing client interest in Europe as well, and the drivers for yields there are different. Germany's fiscal stimulus changes expectations for Europe's growth trajectory, impacting long-dated bond yields there. In terms of central bank policies, we expect the ECB to pause at its next meeting in September, with one final cut priced in within the next 12 months. So an improving economic outlook generally lowers default risk. High-yield bonds are less sensitive to interest rate volatility compared to investment-grade bonds. So therefore, we believe Euro high-yield, particularly short-duration ones, will outperform. There are strong inflows into Euro-denominated funds, mainly the 5 to 7 years fixed maturity plans, providing additional technical support. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.